What is up, guys? It's your boy Mad Trades here, and today I am doing a breakdown trade on eurojpy and how I use supply and demand, and also some other things like market structure and things to make $818 in a day trading this pair. Honestly, it's simple. When you trade, don't overcomplicate anything. Keep it simple. That can be things like only following trades towards the trend, like I did in this trade, uh, and taking my setups. But anyway, let's get into the video. The first thing, I really don't look too much at the higher time frames. If you've been following the channel, you would know that I mainly trade on the 30 seconds, minute, 30-second, and 10-second, but mainly I'm on that 30 seconds, 10 seconds, sometimes 5 seconds if I'm trying to get a sniper entry or something, but I mostly like to trade on those second time frames because, you know, think about this. We're going to talk too much, but I want you guys to think about this. How many times when you're trading, let's say on the higher time frame, and you're in blue for like, it can even be like for 5 minutes, it's going up, you're making profit, but it's not. But since you're on the higher time frame, you're like, damn, that's not that many pips. You only caught like, well, I'm up 5 pips, 7 pips, even 10 pips, and you don't take it, then the trade ends up going against you and you lose. You do not have to trade the higher time frames in this market to make money. More pips does not equate more money. As you see, in this trade, I was in the trade for like 12 minutes. I caught, I believe, around 12 pips. Let's see, how many pips did I catch? But yeah, I did not catch that many pips on this trade. I just want people to know that you do not have to catch crazy amount of pips to make money in this game. Yeah, I caught like almost 12 pips. I got out here, but look how much it kept going. It went an extra, on top of the 11 pips, it went an extra 22 pips within the late London session or whatever. Um, but yeah, but this is the thing, or this is how I analyzed how I wanted to take this trade. So for me, I am Central Time. I like to wake up at around 6 or 7 a.m. to catch the trade, whether that's before the New York session starts or late London session. And the reason why I say late London session as well is because I don't really want to trade the beginning of the session. So I'm going to trade like a part of London session. I don't really catch the end of it towards the end because I just want to catch the scraps that's left, the amount of pips that it has left that it wants to move within that session in the direction that it chose to go at the beginning of that session. And that's kind of why I have my strike zones trading 6 a.m. Like I caught this trade, see, at 6 a.m. exactly, or I would have traded it at 7 a.m. right here, my time, right? Just to catch the last bit of movements within that session. Um, but the first thing, let's just get into it. A couple days ago, before this had happened, and if you guys have been watching the channel, you would know that I like to catch trades that break out from these counter trend lines, or well, trend line breaks. Yeah, I had seen this already, so I knew that eventually that this was gonna probably break because see how many rejections we got down here. Let me get a box tool. We have so many rejections right here, so I was like, we're not closing below any of this market structure, right? And then we kind of have this point A to point B to point C that we could draw up. That happened at 2 a.m. on the Tuesday when it started to break above. I did not get to catch that. I missed it. But you know, who cares? Uh, you're going to miss trades. So I already knew we had some upwards movement. And as you see, like this would have been a beautiful trade, y'all. Like right here would have been so beautiful to catch that, but it's okay. I woke up at 6 a.m. and I caught my piece of that move that I initially wanted. And what you want to do is you want to just catch pieces of a move. Like, you don't want to try to be greedy and catch so many pips. That's when you're gonna mess up and you will not be consistent. But as soon as I knew the direction, okay, I know that we're in a bullish market at that moment. So let me go back. Just go back to the area. Okay. Let's go back to the area. So, like I said, 6 a.m. Central Time or 7 a.m. is my strike time, but I decided to see what I could find at 6 a.m. So the first thing that I noticed was, one, I like to use my moving average, which is a 50 moving average. And I like to trade, I don't like to trade against it. I like to go in the momentum that the 50 moving average is showing me. So boom, I already knew I was looking for buy opportunities. When this sell came here, I did not take this. I seen, well, I was actually even up at 5:30 a.m. Well, I seen this, I wasn't worried. I'm like, okay, I know I'm trying to catch buys to the upside. Boom. It's another thing that I noticed. Well, on this 30-second time frame, I noticed like, hey, this move right here broke this structure right here, right? It broke this whole entire structure. That's why I have this labeled BOS as break of structure. That's what BOS means. And anytime you have a break of structure, whether it's to the downside or upside, you can expect some type of pullback into the area that started that initial break, which would have been this general area. It would have been right here, but I just did like a whole zone right here. That's why I have this whole entire zone marked up right here. And guess where it came? Right back into that area is also a demand zone, supply and demand zones. So if you're not sure or you don't know what supply and demand zones are, so demand is at the bottom and supply is at the top. So in this instance, when you are looking for something to come back into the demand zone to continue to the upside, you want to look for aggressive buying. See how this was aggressive buying and then break of structure? This is so key, y'all. This is gems. Please pay attention. This is gems. This is gems. This is gems. But you want to look for aggressive buying. See how this was aggressive buying coming out of this area or this zone area that I had marked up? And this area held. Now, did it have to hold? No, it did not have to hold. It could have just kept falling if it wanted to. Then this demand zone would have been invalid and I would have traded it. But as soon as it came back to this demand zone, as you see, we have the aggressive buying. It broke structure, so it made a higher high. And then I'm like, okay, now I'm waiting for the retrace to the demand. And it just happens to be on a 50 moving average, which it held. And that's why the demand zone is right there as well. Okay, this is a high probability setup, you know? So I took it. So I got in somewhere around here at 142, 279, I believe. And I was in profit. And then boom, kind of went back into a little bit of drawdown. And when I went back into drawdown, that's when I decided to add another entry, because I'm like, okay, I know this area is holding now because now on the 32nd, this just became a double bottom. I was so confident. So I was like, you know what? I'm going to add another entry. And I added another entry. And when you add entries, if you're starting new, I would suggest don't do that in the beginning. Do one positions as you get better and you're comfortable. Then you can start adding stacking positions, but don't do that in the beginning because you will mess up. Just do one position when you're first starting out. But when I got into it, right at this point now I have two positions running. So, and for me, I like to catch one-to-ones. I did not leave a runner on this trade to keep going. As you see, I could have caught way more than I did, but I got it at 12 pips because sometimes the market's not going to give you 30 pips, 40 pips. I mean, with a pair like eurojpy, it typically likes to, like, see how easily this got to 53 pips? Like, this whole thing, eurojpy moved almost 200 or 174 pips in a session. So I mean, with a pair like this, I mean, I could have, but I'm not greedy. I'm just trying to get my money and get out. So catching one-to-ones is not bad. Don't let anybody tell you that you can't be consistent catching one-to-ones. Stop. Like, because it didn't work for them, don't let them put their beliefs on you. And when you think outside the box, that's how you're gonna really start unlocking things that some people probably don't know. I would have never traded the 30-second time frames like I'm doing now if I would have said, oh my god, everybody's trading the 1 hour, the 4 hour. I traded those time frames a lot. They just did not work for me. And then I came to the conclusion, I'm like, well, if I can be in blue trading these time frames on the higher time frames, and it takes a while for those TPs to get hit, and I feel like trades just be reversing, or things happen if you're in the trade for so long. I think I need to go to the smaller time frames just so I'm not in trades for too long. And so I bought the premium, whatever expensive one they have on here, so that I could trade 30 and 10-second time frame. So you're gonna have to upgrade trading view to one of the premium options to be able to trade 30 seconds to 10 seconds to 5 seconds. You have to do it, and I did it. And started back testing. And supply and demand works on that. As you see, this big push, break of structure, retrace to demand zone, and then from the demand zone, it held and it took off, as you see right there. And that's things you have to look at. And as you see, if I would have kept holding this, being greedy, think it's going to keep going up, guess what? Would have got stopped out at like 928. That's why you don't hold trade for so long. And mind you, this trade took like 10 to 12 minutes. It wasn't a long trade. Like, we were in, we were out. And that's what I like. I like scalping. But honestly, it's just following the trend. It's supply and demand. I mean, this is a supply and demand. Well, this is demand zone. You see, aggressive buying. A retrace to the demand zone. Okay. Now, how are we going to get in this trade to execute? Okay, this demand zone is holding, and it's hugging on my 50 moving average, or 50 smooth moving average, which I like to use when trading. I like to just use the 50. That's the only moving average I use. And then also there's some other things I like to use, but I haven't really released those stuff on YouTube yet, because man, when I release that, you guys are gonna be like, wow, like it's gonna change the game when I release this. How to catch moves easily on the 30-second time frame, get the profits, and get in, get out. And you can also catch supply and demand setups on this on the smaller time frames. But it's pretty much straightforward. As you guys see, like there's nothing too hard of what I'm doing. It's simple. Okay. At 6 a.m. I decided to trade late London session. Okay, what do I see? I look back. I'm like, okay, well, this move took out this high, right? Okay, now that's a break of structure. And what does break of structures do? It usually comes back to retrace to what we call a demand area, because we had this big rally up and it broke structure. Okay, I'm going to zone that area off. Okay, it didn't break below this zoned area, and now it's hugging on my 50 moving average. Okay, now let me get in. It's simply what I did. I didn't get in from this bottom, even though it was hugging on here. Once it started making this little upward move, especially when I seen this candle really shooting up a little bit and seen a little bit of momentum, I just got in and then put my stop loss below the demand zone. Always put your stop loss below demand zone, or if you're looking for selling opportunities, then it will be here with supply zone. Take a supply zone in this instance. I took a demand zone. Yeah, it's just pretty much simple, straightforward. And I took my 1-to-1. You see, I wasn't greedy. I didn't catch none of this. I caught a 1-to-1. I caught 12, dang near 12 pips. But those are things I just want you guys to really look at and seeing that trading is not difficult. I literally did this breakdown, but I mean, there's not much for me to really say, but to explain, okay, what I did. And as you see, I'm explaining it really simple. Like, this is literally what I did. You might need to be, if you're not familiar with market structure, you might need to look at market structure videos. I'll try to make some market structure videos on here, but and more supply and demand videos, because if you don't know what supply and demand is, you're going to be confused. But let me know in the comments if you guys want me to make a supply and demand zone video just to show you examples. I'll just start scrolling through charts and looking at setups that show supply and demand. But that's really what I did. Break of structure. Boom. So now we're making, this is a high. Now this is a higher high. This is a low. This is a higher low. Another higher low. Oop, double bottom. You know, it's simple. And man, once I really start diving in, I want to do something to where I can actually start, like, I wanted things to be structured. So once I really start diving into my real gems for you guys, man, you guys are gonna be like, wow, like, this is game changer. And I know the thing, and it's a strategy that I created myself, not supply and demand, but things that I use with all these things, man. It's a strategy that I'm like, I don't know if you guys are ready, y'all. I might make too many millionaires out here. I don't know, man, with this strategy, at least 6 figures for people. But I'm ready for people to be successful, and hopefully I can help people make extra money a month so that you can use that towards your bills, towards, you know, just things, life, enjoy life. But that's pretty much the video. It's nothing too difficult. It's very simple. I keep it simple. I keep trading simple. I trade on the 30 seconds, 10 seconds, and minute time frame. But yeah, anyway, that's the end of the video. It's your boy Matt Trades signing out. Peace.